The phone lines don't stop ringing from Australians in despair.
National Debt Helpline, you're speaking with Kirsty.
1 in 4 calls this year are from Australians who face mortgage hardship, including some who've been forced to sell their homes.
You've got parents that are skipping meals to make sure their kids are getting fed and making sure the mortgage is getting paid, or living off their credit cards.
Kirsty says some people were allowed to borrow above their means.
That is breaching of responsible lending. You have to consider the stress testing, and the banks have to consider a change in circumstance, including a change in interest rate rise.
As more borrowers roll off cheap fixed loans onto higher variable rates, many are stuck in a mortgage prison.
Most lenders will only be able to give you a loan around $600,000 to $650,000, well below your $800,000 that you have at the moment.
Mortgage broker Reedham Saeed says about 40% of their customers can't refinance with a bank. He says that's because of regulations requiring banks to assess whether people can pay at an interest rate at 3% above the current rates.
It's pushing some of these lower and middle income borrowers to non-banks to simply refinance their loan.
Reedham says buffers should be removed for people refinancing if they have a good history of repayments, and lowered for those buying a new home.
It will simply allow more people on the sidelines who don't have access the ability to go and purchase a home, and it might put less pressure in the rental market.
The horror stories that emerged during the Banking Royal Commission more than 5 years ago led to stronger regulations aimed at better protecting consumers and caps on bonuses paid to bankers. But now banking giant CBA is planning to increase the commissions it pays its home loan bankers, and the CEOs of ANZ and NAB are calling on the government to consider easing lending rules.
The collective effect of all of that regulation has added complexity and in aggregate has made it challenging for bank participants to serve the needs of lower income households.
But others are warning that even tweaks to lending laws could cause turmoil.
What we're seeing here is a race back to the bad old days of greed that led us to the Royal Commission in the first place. This is really an appalling development.
If we undertake a dramatic easing in lending standards and the rules around that, the risk is that the next cycle could be far worse.
A situation that financial counsellors like Kirsty are working hard to avoid.